Hey guys, it's Steve Lamont, the founder here at Elevate Realty Group, and today we are continuing our 2023 educational video in regards to purchasing a home and really some options with financing. And a quick message to you, the federal government, Fannie Mae and Freddie Mac, are issuing some new guidance and new rules coming into effect in May, where they're going to be raising the fees. They call them loan level pricing adjustments that lenders must charge. And what's crazy about this is if you have a good FICO score, like over 680, you're gonna be punished and you're gonna pay an extra 1% fee to pay for people who don't have good credit, 620 or below, because they're going to get a 1.75% discount. And whether that's the right or wrong answer, I'm not sure, but if you are looking to buy a home in the next few weeks, we're recommending that you take advantage of the market today, because you're gonna save, roughly 1.5% probably, and interest rates are good. I wanted to carry on with that message with what are some of the fees that take place when you buy a home? Because everyone is always concerned with, well, I don't have enough money for my down payment. We've talked about this in the past, but there are all kinds of down payment programs to get 3.5% down, like grant programs or silent second loans. So you don't need 20% down to buy a home, whether you're a first time or a second time or a fifth time home buyer. One of the most common down payment products out there is 10 to 15% down. Yes, you have mortgage insurance when you don't put 20% down. One of the cool factors is that you can actually prepay your mortgage insurance up front. So say you put 10% down, it might only cost you $5,000 to pay your mortgage insurance off. That is a lender question. But the key is you don't need 20% down, so you don't need to delay, save up for 2-3 years to get 20% down. The other key point there are some loan costs and there's some real estate costs. The loan costs that are really important to understand, and you need to ask questions when you're speaking to your lender. They'll call them all different names, but they're typically called an underwriting fee or a loan fee or a transaction fee. You want to find out what are they charging you to facilitate the loan, okay? Another common term that they'll use is called points. Like, how many points do you have to pay to get your loan and or your current interest rate? A point is just a percentage of your loan amount. So with a $100,000 mortgage, 1 point is $1,000. So a lot of times what they'll say is like, hey, we have rates at 4.75, but to get that rate, you need to pay 4 points, which is, $20,000. You have to pay attention to that. Some other small fees that you're going to occur: notary fees, document prep fees. This is all on the loan side. And then you're gonna need to pre-fund your impound accounts, which are your escrow for your property taxes and your insurance, because they take that money every month so that you have enough money to pay your property taxes and your insurance. Well, when you buy your home for the first time, they pre-fund that with 6 months of expenses. This is not an expense, you're just prepaying expenses that you would already have. Your real estate costs for buying a home are actually very marginal. You'll have probably somewhere around $500 to $800 in inspection costs, somewhere around $1,500 in escrow and title fees, but that's it. A good rule of thumb is to save 2 to 4% of whatever purchase price you're buying for your loan fees, your pre-funding your escrow account, and your real estate related costs when you go to buy a home. If you cancel an escrow and you have to go buy another home, obviously your costs are increased because you're paying for inspections and appraisals. Appraisals tend to run somewhere around, it depends on what appraiser you use, $600 to $1,000 depending on demand. So this is the breakdown and some of the costs that you should be incurring when you're buying a home. It's not substantial, it's just something that you want to plan for. And more importantly, there are some big changes coming to how they charge you for your loan with loan level pricing adjustments. And if you're in the market today, we suggest that you try to lock in your home in the next 2 to 3 weeks, or else if you have a decent credit score, you're going to be charged for this, right? If you don't have a decent credit score, it might be wise to wait. As always, if you're considering selling a home, the market's been pretty stable this year. Visit our website at homesbyelevate.com. If you're looking to buy a home, we have an amazing buyer plan of action that has been succeeding in today's market. Reach out to us today at 916-436-SELL.